Something else we've been talking a lot about are the various, perhaps, areas of froth in the market. The hot IPOs we had last week of Airbnb and DoorDash, the boom that we have seen in SPAC deals this year. What does that tell us about where we are in terms of the trajectory and this cycle in stocks? We want to bring in Mark Howard. He is BNP Paribas Multi-Asset Strategist. And obviously, these IPOs in particular, Mark, have gotten a lot of attention. Does it tell us that things are sort of bubbly right now and too frothy? Or is that there's just a heck of a lot of demand out there?
Great question, Julie. Thank you for having me on this December Monday. You know, it tells you, and it's great we're talking about this week because the Fed is meeting on Wednesday. And this is all about what the Fed has done in terms of, pushing economic activity, supporting markets with their open market purchases and their incredible accommodation, and other central banks, of course. And that is pushing people deeper and deeper into other asset categories, including, what we call, private equity and venture capital. And those products are very expensive for the retail investor. So when you get an IPO like Airbnb or DoorDash, that's a form of venture finance that individuals can get their hands on. And so they get bid up very aggressively. So I don't think it says so much about broad valuations as it does about the reach for return at a time when yields are going to stay really low for a long time. And there just isn't that much growth equity available in the public market.
Mark, just playing off that, I mean, do you think the Fed has sown the seeds for the next bubble in risk assets?
I wouldn't interpret it that way. I think, as I said before, there is dramatic organic need for return. If you look at the forward expectations of public markets versus the historic returns, whether you're looking at public bond markets, public equity markets, the forward expectations are dramatically lower. And that is forcing people into other asset categories in the private market, such as venture capital, private equity, private credit, et cetera. And so I don't know that the Fed is sowing the seeds of bubbles. What's happening is the street and corporations are innovating. Julie mentioned SPACs. They're innovating and creating new outlets, new products. And that in turn is creating opportunity for people to try and achieve those returns that they need for their endowment, for their foundation, for their family office.
And when you think about, those dynamics going forward, Mark, are people maybe understanding those dynamics more quickly in this cycle than the last cycle, where there was a lot of hate towards the market rally off the bottom for several years? It seems like everyone kind of, got on board come September and now have been maybe a little more creative earlier in the cycle in how to achieve some of those targets.
Yeah, that's an interesting perspective. I don't know if people got on board earlier. I think what has happened is there's just a broader acceptance that around the world, central banks are on full duty and are going to stay on full duty for a prolonged period. And that provides underlying support to take a higher degree of risk than you might have in prior cycles. There just isn't the ambiguity about whether central banks will be supportive, both in the traditional fixed income markets, but also more broadly the capital markets. And so that comfort allows people to step in and buy the dip. So when there's a scare, like we saw a little bit in October, and we've seen previously in over the course of 2020, there's an awful lot of enthusiasm to buy these dips. And I think that's going to happen again in 2021 as we hit an air pocket, inevitably, probably in Q1 sometime, and we have a pullback. You're going to see that same resurgence of enthusiasm.
Mark, what are you seeing in terms of institutional participation during both these moves and sort of the SPAC/IPO moves versus retail investors? And is that different at all from past cycles that we have seen?
Well, I don't personally interact with the Robinhood crowd and the individual investor group. My focus is on the institutional side, so I can't really opine on what's happening there. I read the public comments and the other information sources just like you do, and it's clear that there's an awful lot of individual activity that creates buzz and creates enthusiasm, especially around hot stories in the IPO market. Institutions are particularly the hedge fund community and some of the new SPV structures, whether they're SPACs, whether they're closed-end funds, whether they're BDCs, they're very involved in private markets. They're buying pre-deal equity. They're buying private loans, private credit, and they're very involved in the private markets as a way to get kind of outsized returns versus the public markets. And so when these transactions come to the public market, they're measured not against the S&P or the NASDAQ, but against what they can generate in private markets. And sometimes it works, sometimes it's compelling, sometimes it's not. But there's a real push into less liquid, higher return markets. And I think that's going to continue as long as there's optimism around the vaccine and optimism around growth in the second half of next year.
And just very quickly, Mark, is there also risk, though, in that?
Yes. Well, I think your prior segment was fascinating, talking about some of the nuances and concerns around distribution. Even more importantly, are concerns about the take-up of the vaccine. There are a number of people, as we know, not just in this country, but around the world, who are skeptical about taking vaccines and the exact time of a return to normalcy and the economic impact. We've had this K recovery, and the farther a normalization of economic activity is pushed out, the more acute that K becomes, and the bigger the disparity in economic outcomes for society, and all sorts of risks that come with that. So that's what we're going to be worried about as 2021 plays out. Not only do we have challenges in Washington getting effective policy pushed through, but we also have social stresses, just like we saw with the disputes in Washington over the weekend. If they pick up, that's going to be a crimp on economic activity and a concern for markets at some point next year.
Yeah, definitely something to keep an eye on. Mark Howard, BNP Paribas Multi-Asset Strategist, thank you so much. Appreciate it.